I just like to start off this video by saying I'm not a financial advisor, I'm not a stockbroker, I'm not a professional. I'm just someone who's always been very interested in investing. I just kind of wanted to share kind of my philosophy, where I have my money, etc., because it's a very interesting time to be investing with COVID, with the inflationary crisis, with supply shortages, with Ukraine-Russia war. There's a lot of moving pieces. And as whenever there's social upheaval, there's a lot of opportunities and a lot of risks. So first and foremost, the vast majority of my money is invested in diversified ETFs. So for those of you who don't know what an ETF is, it's basically a mutual fund that isn't actively managed. Normally within a mutual fund, you have a whole bunch of stockbrokers who are buying and selling, who are doing research and that kind of thing. And all those people have to be paid. The financial advisors have to be paid. There's all kinds of stuff like that. So the overhead for a mutual fund is they'll often take like 2, 3, 4, 5% of your total investment a year to cover the overhead. Because an ETF isn't really actively managed, the fee is like 0.5% or something. It's much less. And I mean, it adds up over time. If they're charging you 3% on your investments, you have to earn at least 3% on them in order to break even, let alone keep up with inflation. With an ETF, you only have to earn like 0.5% or something. So basically what ETFs tend to do is they will just buy a group of stocks that attempt to reflect an industry or a stock exchange or something like that. So it might just be the S&P 500. And the fund just buys 10,000 shares in each fund with each stock within the S&P 500, and then sells part of that basket out. They might take like the 100 largest banks and do it based on that. They might do it based on a bunch of oil companies, that sort of thing. So it's a way to kind of get a whole bunch of different stocks within one basket in a very simple and cost-effective way. Because even if, say, CIBC goes down in value, you still have it spread out among all the other banks. And ETFs also pay out dividends. So for those of you who aren't aware, a dividend is when a company gives some of its profits to its shareholders, generally expressed as a percentage. And this is on top of whatever the share price is. So you might have 1,000 shares in ExxonMobil, and the dividend might be 1%, so you'll get $10. It's normally paid in quarterly installments. In practice, it's generally more like 3, 4, 5%, and you can use that to buy new shares, and then generally speaking, your shares appreciate in value. So there are a lot of people who just are dividend investors, because the companies that tend to give out dividends are oil companies, banks, I think sometimes telecom companies that tend to be pretty stable. And a lot of people like to do that over the long term and just kind of gradually buy shares up. You also have ETFs that own real estate property, like rental properties, corporate bonds, government bonds, that kind of thing. So that's where I have the vast majority of my money. It's spread out over, I think, like 5 or 6 different funds. There's like I use Wealthsimple, so there's like a Toronto Stock Exchange one. There's like a large North American companies. There's a real estate one. There's a government funds one. And it may sound like there's only 5, but with each of those, there's baskets of dozens or hundreds or thousands of different stocks. So generally, I kind of think if you don't have any interest in active investing, ETFs are, generally speaking, a pretty good place to put your money, as it's well diversified. And if you're getting one that's just indexed to the New York Stock Exchange or the Toronto Stock Exchange, unless the entire economy collapses, it's always going to be worth something. Also, I don't know if this is true or not, but I tend to think that the stock market just goes up with inflation. And I just think this kind of logically, because so when you go to a store, the prices of items there are affected by inflation. and the company will just raise the prices if their costs go up and keep up with whatever inflation is. So I would imagine the share price and corporate profits go up at the same rate of inflation or similar to it. I hope that kind of makes sense. So like if a company makes $1 million selling toothpaste and inflation is 10%, they can just raise the price of their toothpaste and then they'll be making $1,100,000. So that tends to be kind of my logic. Once again, it really depends. A lot of people like to do the Wall Street bets thing where they try to manipulate the market, or they pick something that they think is going to go way up or way down, and they kind of treat it more like a casino. If you want to do that, you can do that. If you're going to do that, my general advice for gambling, be it on cryptocurrency, be it on lottery tickets, be it on a casino, be it on this, is only bet what you're willing to lose. You should, when you're doing that, say, okay, I have to imagine I'm going to lose half to all of this, and am I okay with that? So if you have, I don't know, 100 grand in savings, maybe you only want to gamble with 5 grand of that or something. And there's a temptation to go higher, but I just think that's generally a pretty good rule of thumb whenever you're gambling. So I have a bunch of money in that, but with the inflation thing happening, there was the supply shortages earlier this year. I started to get really worried because I had a bunch of cash sitting in my bank account, and I'm like, this is losing value every day because inflationary pressures. So I was just like, maybe I'll do some self-directed investment. Once again, I use Wealthsimple. They have a free brokerage service, so they don't charge on stock trades, which is really nice. So I started kind of doing some of my own trading, and so I was just thinking, what should I be buying? And my philosophy tends to be, and I don't know if this is a good one or not, I tend to look at kind of the meta narrative, like where the overall economy's at. What do I think is going to be in demand? What do I think is not going to be in demand? What do I think is a good store of value or not? Rather than kind of focusing on any particular stock, I suppose you could say. And I was thinking to myself, okay, so supply chains are being disrupted. A lot of things that are exported around the world are things like rare earth materials, oil and gas, copper, uranium, coal, food, agricultural goods, that kind of thing. They're generally called commodities, and you can buy futures in that, where you're betting on the price to go up or down. I don't really like doing stuff like that. I'd rather own a piece of a company. So I started buying. I went through, and I mean, maybe this is a bad way of investing, but I just looked up top 10 largest oil companies, and then I saw which ones were listed, and I just bought some shares in them. So specifically Chevron, ExxonMobil, Suncor, and Enbridge, I think. And I kind of personally regard energy companies as being a good investment in general, because there's not going to be a switch away from oil anytime in the near future. Most of them pay pretty good dividends out. And even if alternative energy became viable, I think a lot of them would just kind of transfer over. I generally think buying shares in something like Exxon is a pretty good long-term idea. So I did that. I went through and I looked up what are the big mining companies. I got there's some ETFs, so I got some ETFs in rare earth metals, in stuff like that. There's stocks you can buy in companies that just hold physical gold, silver, and platinum. And that way you don't have to worry about hiding it yourself or buying it or transporting it. You just buy it and it just goes up and down with the price of gold, silver, platinum. So I just kind of spread it out over a bunch of different things. And then the Ukraine-Russia war broke out. So my strategy was I dumped some more money in, and I just literally went to a list of Russian exports, and I looked up what are some big companies that produce that stuff. So once again, that's stuff like uranium, oil, coal, wheat is a big one, fertilizer's a big one. And I just kind of went through and looked up all the kinds of things that Russia exported, and I just bought some shares in that. And so far, it's actually been going pretty well. The energy stocks went up a lot. One of my issues is I don't really know when you're supposed to sell things. So like my Chevron went up 35%. So I just sold it. It'll probably go up more, but I figured I'd sold it and then buy some more Exxon or more of a different energy stock or something else that hasn't really gone up that much yet. But a lot of like the copper, uranium, what's the other one? Fertilizer have actually been going up quite a bit. Wheat futures have been going up quite a bit. It's kind of hard to buy shares in agricultural companies. So I don't really know how it works, but I got some shares in wheat futures. So I just have that. I'm not really sure how long I'm going to hold some of it. Some of it, like Exxon, I'm probably just going to hold and keep that long term. Probably Suncor and Enbridge and stuff. I just kind of figured it went up. My Chevron went up 35%. That was like $200 USD I made. I just said, you know what? I'm just going to cash out on this one. I don't have to pay for trades anyways. But that's just kind of what I'm thinking. And once again, I don't know if there's going to be some kind of peace deal. Maybe they'll reduce some of the sanctions, but that's just kind of how I think about investing. Is you have to think about it in kind of, in my opinion, kind of where society's going, what you think people need. Because people are going to need oil and gas, they're going to need materials and stuff like that for their foreseeable future. Granted, supply and demand of that goes up and down. You had an oil glut during the COVID, and prices went way down. But that was because the economy was stalled. Now that it's opening up again, people are going to want it again. So you can kind of look at it in long term, medium term, short term. I would say don't bet. If you want to put money into like I said, Exxon or a large mining company or real estate or something like ETF of like rare earth metals, I think a lot of that stuff isn't going to like go away overnight. So if you wind up not making money in it and you have to hold it for a couple years, I don't really think that that's a big deal. But when you're doing stocks, I just recommend diversify, buy a bunch of different stuff. Don't go all in. If you're going to bet on something risky, only bet what you're willing to lose. That's what I think a lot of people did with the whole GameStop thing, is people bet more than they were willing to lose, and they didn't cash out when they were supposed to cash out, or when it would have been logical to cash out, because they kind of got greedy or ideologically motivated. So hopefully you found that interesting. I can do more investing videos in the future. Once again, I'm not a professional. That's just kind of my thoughts on the matter.